Mark, we'll start there, shall we? The fact that the global equity markets seem unmoved, unworried perhaps by another failure to reach a resolution to the war in the Middle East. Bond markets, though, on the other hand, really do seem to care, and we see yields going higher. How do we square this circle?
Yeah, the resilience in European equity markets in particular is quite notable given the jump up in oil prices. But essentially, the AI enthusiasm is kind of so strong that it's kind of adding resilience to other stock markets, that those AI stocks are powering so much further ahead that just, other stocks are having to play catch up and they're not dragging the index down despite that increase in oil prices. But as you mentioned, we're actually seeing a little bit of a disconnect because yields are higher this morning. Yields are reacting to what's happening in oil markets. FX is a little bit caught in the middle. I mean, FX has been a bit more of a dead market for a long period of time now. It's not where the excitement is. But we are seeing that disconnect between bonds and equities that isn't probably long-term sustainable, but short-term it just emphasizes that, from a market's point of view, people have moved on from the Iran conflict until it really takes a big turn again. It doesn't matter the incremental headlines. It's either resolved or major military invasion. But apart from that, we'll just care about the AI trade.
So what about the AI trade? How much longer can the Kospi keep doing what it's doing on a daily basis?
Well, one of the things that's really miraculous is the Kospi's up, 230% since April last year. It's cheaper. It's actually, basically towards the cheapest it's been in history on a forward-looking PE basis. Now, and basically what's happening on the earnings side is much more dramatic than the nominal gains. Now, the Kospi is a unique case where, you've just seen a market that's gone absolutely stellar but continues to get cheaper. But that is what's happening in the AI moment. We're in this AI bubble. We're in the inflation stage. How long will it last? I think a long time still. I think this is a golden era of kind of bullishness around the AI trade. We're going to get volatility from things like the Trump-Xi summit and from Iran, but ultimately until the AI trade collapses, then all those dips are to be bought. When the AI trade collapses, then there'll be tears.
Mark, can you just let us know when that happens, please, just ahead of time? Mark, which parts of the market are most sensitive to the Xi-Trump meeting later this week?
Yeah, sorry, Tom, just to answer your first question, I know it's a little bit, rhetorical, but the idea is actually, is the gains are going to be so strong first that you don't have to preempt the turn, and you shouldn't try to preempt the turn. In fact, it's what you should realize is that when it's a negative risk event that is AI focused, that's when you suddenly panic and turn bearish. But you don't need to preempt it. I think as to what happens to the Trump-Xi thing, again, ultimately, as long as AI is fine, I think we'll move on from whatever noise that creates. My one worry into that event is that in the opposite to the Fed put, we have something like the Trump call, which is this idea that when stock markets are at global highs, what he really cares about, that's when he kind of takes the risk of being more hardline in some of his other objectives. So as stocks doing so well into this meeting, I do see a scenario where maybe Trump takes a slightly harder line with Xi, and that creates headline risk. But as long as AI is okay, we're okay.